Hello, this is Sanmi Adeagbo. I want to quickly discuss something with you, and that is going to be on a New Zealand Canadian dollar. And that is the screen, and that is the chart I'm having on my screen, the weekly chart of the New Zealand Canadian dollar. So, looking at this chart, this is a naked chart with no indicators, nothing. It's just a naked chart where I ruled out or pointed out the important levels, the closest important levels. Starting from here, this is a zone of a resistance, a resistive zone. Price came there three times and it was resisted, okay, making this place a very strong zone, resistance zone. Likewise here, this level and this level. Okay, this particular zone is also a very strong support zone. So what can we say about this? Will price come down here, bounce off, come down again, go up, rather bounce, come around, or will price move from here and break out of here? Will price go down and break out of here? These are questions we ask ourselves. Okay, these are important levels, the closest, the immediate important levels that price that can go to. Okay, the it's very important to note levels in the market, but levels do not determine the trends and the corrections. We don't usually know the exact trend of a particular market or the correction that it's making at a point in time. But with the use of the Elliott 12 principle, we can know to a certain degree, certain good degree, how price is moving and what we expect next. Okay, let me drop my Elliott 12 count. Now look at this. It is very clear that from here, okay, from this place down to here, from here to here to here to here, okay, it shows that price is actually in a corrective zone. Okay, probably so many decades ago or few decades ago, price has been moving down here, okay, from a very long, maybe from 2 point something something something, and our price is now correcting. And what kind of corrective pattern are we seeing here? This is looking like a double zigzag pattern. Okay, A, B, C, this is W, this is X, and then we are having another, okay, another ABC, which is projected to end at 1.0861, taking the 100% of this from here. I have 0.8610, but in the meantime, we can have a movement up to this zone. Okay, so what price is telling us here is that it's in a corrective state, but the corrective state is in the upward move, and there's no clear indication here that the correction is over. All right, so that is a kind of information that Elliott wave can give to us, and with the use of Elliott, we will be able to access the market more accurately with more confidence, and then we'll be able to take better decisions that will make us to win more trades than we lose, and when we win better than when we lose. Okay, talking of winning $10, and when you lose probably $3, $2, or $4. So if you trade like this and you win minimum of 50% of your trades, you are in for a big thing. So you can call yourself a profitable trader. All right, now from here, what next? How do we access this? If this is ABC, the W, ABC, X, then what do we expect next? I said earlier that we're expecting a real move upside. Okay, looking at this level, the price has been moving, okay, swinging off this level, broke it, off it, broke it, broke it. Now it can also come off it. So that's going to be 1, 2, 3. And when it comes off it this time, we're expecting this level to give way. Expecting this level, all right, to give way. But let's look at how we can take advantage of this information that we are. It's very important that when we want to trade, we have good information in our hands so that we'll know how to position ourselves in the context of the market and how to maintain our trades, to know when we are wrong how to get out when we are wrong, and how to continue with the move when we are correct. It's so important. So let me show you this screenshot, because this is the weekly chart that I said that that I showed you earlier, that price is expected to go up, okay, probably in the meantime to 1.02800, and then a long, very long term, that's 1.08610. This is a weekly chart, so it's going to take a whole lot of time to achieve all this if price is actually going to move this way. Okay, it's possible that price goes down. Okay, it still fulfills the guideline or the rule of Elliott. You have A, B can still come deep, but how deep can this B come to? That is why we have to look at the longer time frame, so that we analyze the sub waves of this B and the levels that are in between, that are formed within it, so that we're able to project and forecast the level where we're going to be expecting an upward push. Okay, so let me show you the price chart of the 4-hour price chart. Okay, the 4-hour price chart, let me see how I can bring them together. No, this is B. This B is what we are looking at now. So let's go to the 4-hour price chart. Now the 4-hour price chart shows us this B. Okay, this is A, B, C, a very nice zigzag. Okay, look at the levels that I measured. The projection of A from B is 100% here, and the projection of this one from this one is 100% here. So this zone now, this level is now a very important level for us to look at, because it signifies the confluence of the internal Fibonacci projections, okay, from different places of this particular zigzag pattern. It's even a double zigzag, A, B, C, X, A, B, C. All right, so I just put it A, B, C. And now, how do we take advantage of this? Even looking at this line here, I use the Gann line to measure possible levels where we can see a move, okay, a reversal zone. So for this one, okay, these two lines to coincide with this, it shows that this place is a very strong confluence zone for us to look at. Okay, but let's look at the pattern. This particular one here, we're expecting a 5-wave structure. Okay, this is a 5-wave structure, a zigzag. We're expecting a 5-wave structure because it's 535, 535, X, 535, a real double zigzag. Okay, so we're going to be looking at how this 5-wave is going to be formed before we know how we're going to trade, how we're going to position ourselves for this opportunity derived from this information. Okay, so let me take us to the 15-minute chart. The 15-minute chart is this is the 15-minute chart. Now this is the 15-minute chart. Now the 15-minute chart, this is the B. This is the last move, the 5-wave move that I was talking about. This is the first wave, the second, the third, the fourth, and then this is the 5th. And I have an alternative. Now this 5th wave is short, but it's quite it does not go against the rule of Elliott's wave, okay, because that's already broken below here, and it's just not bad at all. So if price returns from here and then breaks above 0.89990, then it's going to be, that means this 5th wave is going to be established, and a buying opportunity can suffice, and then a stop loss can be put here to ride price upward. But on the other hand, what about if this is going to go down more, because this 5th wave is actually short? We usually have more than that, longer than that. Okay, so this is the first wave, this could be the second, and then I made this projection. You can see that it's still within this particular reversal zone that we're looking at. Okay, so if price moves in 5-wave structure, okay, down here, then we can be looking for a buying opportunity when we see our buying signals telling us to do so. Because after the formation of the pattern, the completion of the pattern, then we will look for certain combinations of maybe candlestick indicators, divergence, and all that to enter the buying trade, so that we'll be able to ride price upside. So this is an alternative count. This is the first count. So the idea is, if price breaks above here from this level now, as it's going, if it breaks above here, okay, above 0.8990, there's going to be a buying opportunity. I will send the signal to all my subscribers. But if price dips, then I'm also we're going to look at it very closely and see that's going to be a return. So, but if price now goes in very high momentum down here, then this short-term analysis is going to be violated. So we're going to now look at what price is doing in another way. Okay, but I don't think, even if it goes below here, below this level, still don't think that that this is violated. Okay, this is not yet violated, because price can still go a bit deeper, probably to this point, before it start moving out. So what we're going to do is to reanalyze this B and see what price is actually doing by measuring the internal Fibonacci levels again, to know which is the next level for us to take trading opportunities. So that is what I want to share with you. I hope it's gonna be helpful to you. For those of you that are on my subscription list, I'm going to alert you when there is an opportunity that I see is worth taking. All right, thank you very much. Please look at this chart, look at this New Zealand kind down dollar very well. If it's going to move in our direction the way we've seen it here, then it's going to be a very beautiful trade. We're talking about a trade of 1:4, 1:5, 1:6. Sweet trade. All right, thank you very much. This is Sanmi Adeagbo. I'm going to update you however it goes. All right, thank you very much. Bye.